The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 29th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. For all of you new listeners, welcome to the show out here. You know, here at the Hotel California, TFNN. Check-in time is now a little bit earlier. That means you can get up, set your alarm clock. We kick things off at 8 o'clock. Our man John Logan does a great show called The Global Market Pulse out there. John is the author of the TAS professional market profiles that I use on my e-signal charts out here. So a great trading tool out there. So check in with us at 8 o'clock. We go now for 10 hours a day, 8 in the morning till 10 o'clock, where you have different contributors providing their thoughts, their input on what the markets are going to do. So you've got me here during the next hour. And what I'll do is we'll take a look at some of the different tactical tools, A to B equals CD patterns. We'll look at Fibonacci expansions and retracements. We'll take a look at the Rhodes momentum trading indicators out there. They really help us to understand the trend when trends are changing, staying with inside the trend out there. So they're great tactics, great trading strategies, because the key, folks, is to make sure that we do what we can to get our money to work harder for us than we do for it. Now, excuse me. This is an interactive forum, and that means you can give us a call at 877-927-6648. Or internationally, you can call us at 727-445-1044 out there. And happy to field your calls, take a look at your stock chart, help you identify where price is likely moving to. So this is terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow is up 62 points, trading out 64 points, trading out at 17,047. S&P up 5 at 1984. NASDAQ Composite up 23 points right now. Russell 2000 leading the charge up 0.6%. She's trading out at 1147. NDX 100 up 14 points. New York Stock Exchange up 24 points right now. Net advancing issues about 2-1 over decline. Advancing issues 2-1 over declining issues out there. So market breadth is just so-so as we speak at the moment. Gold is trading down $5. It was up during the first hour of the show. It's trading out at $12.98. Silver is almost flat. It's up just over a penny right now. It's trading out at $20.58. Light sweet crude back about $1.17. It's trading at $100.50. We'll go check in on that light sweet crude here in a bit. Leading the charge, the upside, we've got Micro Strategy, MSTR. That has gapped up. Looks like they are out with numbers, $142 million in revenues versus $137 million out there. That is in the process right now of taking out a swing point, a large swing point with volume. How about this one? Here's an A to B equals CD to the upside. Trading session is May 27th. Does volume. Not a real liquid stock out here. 115,000 shares as an example on that trading session. Of course, it's taken out the B point here this morning. Already done 138,000 shares out there. Let's pull this back. And, hey, not a bad-looking stock chart out here. How about this? This thing pulled back. Let me do this for you. As we let me just turn a couple of tools off of the chart out here. Let's do that. Let's do that. Let's do that. There we go. Now we got a little bit of a clean chart to take a look at. What I really want to show you is how this stock here had wide price spread, accelerated volume on the trade. It's a daily chart that we're looking at. MSTR is the ticker symbol. Breaks out. Again, for this equity, not a ton of traded volume. 552,000 shares on October 29, 2013. As we put our little horizontal line across the screen out here, right at the, oops, didn't mean to do the second one out there, right at the $100 mark. That's the low of the, how about $100 even Steven on October 29th, 2013, where it broke out from. Take a look at how price finally comes back to that area. It takes all the way until April of 2012, and it pulls back there on much, much lighter volume. Remember, this thing broke out with volume of 552,000 shares as the area was tested. It was with 57,000 shares on April 14th, 83,000 shares on April 15th. If you want to talk about being able to buy a breakout, well, this one is textbook. Then what does this equity do here? It has another sign of strength off of that breakout area, and that's on April 24th, 2012 out there. So a nice-looking equity. It's breaking out one more time today. That would say, what should you do? I would say, with regard to this equity, let it come back to a breakout area. Maybe even yesterday's low out there at around 136.93. MSTR breaking out again for a third time out here. Let's go take a look at where we're at in the market. If you didn't catch the first hour of the show, that is archived on Channel 9. I did a fairly thorough review. We took a look at the SOX index, and we took a look at the S&P and the Dow. So go back, listen to that archive. Again, Channel 9 here at TFNN. We also took a look here as the show began, but it's by taking a look at the Dow futures. And the reason why I showed the Dow futures, they have been the weakest out here. They've been kind of a weak link. Well, the Russell and the Dow have been fighting the bulls in the NASDAQ and the S&P 500. Now, yesterday we had the Dow futures trade down to a low. This was kind of like during this hour here, the 10 to 11 o'clock hour. You're looking at a 2-hour chart. 2-hour chart says the candle we're looking at here, as I exploded up on my screen here, that doesn't end till 12 noon. And if you were listening on yesterday, I said, hey, we don't really know with regard to till the session ends whether or not the bears are going to have control of the Dow or not. Why do I say that? Because a nice little rising price channel out here that's been in place inside of the Dow, and what it proved was that the bears do not have control of the Dow, which is really kind of an amazing thing. That doesn't mean there's not maybe a counter-trend rally that is underway here, and that's a possibility. We could take a look at an A to B equals CD pattern out here. We'll take a look at a potential Gartley sell pattern that would be forming inside of the Dow futures. You'd start with yesterday's low as your A point. Your B point out here would be the trading session from 2 o'clock in the afternoon as it made a high of 16,938. Pulls back this morning into the 6 a.m. time frame when it gets out to the 16,881. Now, your 1-to-1 A to B equals CD to the upside says that price wants to move to at least the 0.786 retracement level. That's at 17,011. You're trading at 16,983 right now. So 17,011, pretty much in the cards, in my opinion out here. Now, it could move higher than that. In fact, it could very easily move higher than that. But at that level, at 17,011, let's go take a look at the I'll use the coloring in tool that we've got with inside of Ensign Windows out here. Here's your advanced type of pattern out here. You set up a nice little Gartley sell. Now, just because it hits that mark, don't sell that top tick. Wait until you get some kind of reversal out here, because I could make the case that what it really wants to do is get up to 17,046. So just because a Gartley sell pattern is setting up, that doesn't mean that that's where price wants to stop. In fact, you want to really learn how to buy and sell the D point of that lightning bolt pattern, the A to B equals CD to the upside. And I would say at this stage of the game, more likely we want to see a move. It wants to see a move up to 17,046. Now, here's the issue. Right now, you're getting close to trading into its swing point high that has to be monitored. That's the 12 noon session on July 17th. That low is 16,993. So I'm saying, just by virtue of the A to B equals CD pattern that's underway, that price wants to travel up into that area. And if it closes inside there, this again here is coming in at 12 noon, so after Basil's show, just before we do the options hour out here today, if you see it close at 12 noon, that is inside that level of 16,993, pretty good indication that not just that Stevie's A to B equals CD tool that suggests 17,046 gets hit, it suggests that, you know what, maybe what really gets hit is the high, 17,085. And then if you see a close above 17,085, the message is very clear to me, and that message is that the next rally leg is very likely begun out here inside of the market. So we want to be paying attention as to what goes on inside of the Dow. Now, if you take a look at the S&P here, the S&P has been traveling in a 236-point consolidation level, and it broke out of it. It came back, came back and tested a second time, and then finally gave way. And it gave way, and it pulled back, and what it did was it made a 1 to 1.618 A to B equals CD to the downside. It actually made it a little bit lower low than that on the trading session here at 10:30 in the morning on July 28th out there. But nonetheless, right now it's back up above the consolidation level, very close to it. We'll have a breakout of the S&P if we see a close above the 7:30 a.m. high. That is from the trading session 8 o'clock high. That's from the trading session of July 24th out there, 1985.70. Out there. You see a close above that, and you must be trying to sell a top tick if you are trying to go ahead and short the S&P, because I think the message, you'd have the S&P as well as the Dow breaking above those highs, and it couldn't get too much more bullish than, well, it could get more bullish than that, but I'd have to just say that it doesn't get too much more bullish when we take a look at these short-term charts out there. Now, let's go take a look at light sweet crude. Let's look at light sweet crude. We use a couple of different charting tools out here. Light sweet crude, which contract are we in here as we speak right now? We are in the September contract, I believe. Looks fairly active. Here's the September. We've got the July. No, we're not in July any longer out here. Where's the August contract down here? Q, where's that? We're in the September contract. So let's take a look at what we can see inside of light sweet crude. Now, light sweet crude has broken through its rising price channel out here. This could be forming an A to B equals CD to the downside. If it does that, you'll see it get below the price level, the July 15th low, which is 98.68 out here. Now, if you take a look at retracements from high to low, what we're going to find out is that the retracement was very close to a 0.618 retracement, almost exactly. The exact number would have been 103.60. It got up to 103.45. Hey, not too bad for a $103 trading vehicle. Now, if we see an A to B equals CD to the downside, that's if it breaks that July 15th, July 15th low of 98.68. What you'll likely see is light sweet crude move down to about 95.49. That would be my price projection. Now, at that level, that looks like that probably sets up where it's getting close to setting up a Gartley buy pattern. Let's go take a look at what that would be. Yeah, in fact, it does. And here's what that pattern would look like. Let me just do one more Fibonacci expansion of that B to C swing. But, oh, yeah, it's a beauty. So here's what it looks like light sweet crude could be doing, and this would be your next potential buy area, which would be right around the 95.73 range out there. Now, look, if it does come to fruition, don't just set up your buy order right there. But what you've got, let me do this here. Let me get rid of this tool here. You've got a really nice potential Gartley buy. Take a look at the Fibonacci numbers out here. A 0.618 retracement, a 1.618 expansion, another 0.618 retracement. It doesn't get too much better than that when it comes to good old H.M. Gartley. 877-927-6648. You can give us a call, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 63 points right now. S&P is up 4. Russell up leading the charge to the upside out here, up 7 points right now. And lead the charge here. Let's see. The downside, you've got Meridian Bancorp, EBSB. That's up 59% out there. I think they're issuing more stock. That's what they're doing. They're floating some stock out there, so we're not going to pay attention. Herbalife down about 12% off $8 right now. If we take a look at Herbalife, let's look at the volume out here. So gapping down so far today, 3 million shares. That's after a big key reversal session out here. Big wide-ranging bar with 27 million shares. So we've been trading for an hour, 3 times 6, 18. So it doesn't have that same volume as that upthrust out here. So we'll see. That's the real tight. Now, Herbalife did complete an A to B equals C pattern to the upside. $69.96 was its 1-to-1 price projection. It got to $69.69, not $69.96. A little dyslexic when it comes to Herbalife. When we take a look at the last two numbers out there, none the less out here. I don't know how you really trade the stock. In fact, I would say you just simply stay out of trading that equity. HLF is the ticker symbol. To the downside, we've got Galt, John Galt. Galactin Therapeutics. There's going to be a movie that's coming out I believe it's this fall, about John Galt out there for all of you. Anne, I always called her Anne Rand. Of course, I began reading her books back in the 1970s, so I was a late bloomer in reading her books out there. My son and I went to the movies over the weekend. We took in a movie. We went and saw that movie, America. Pretty cool movie out there. I might recommend it to you, at least not on the political side. Just some pretty good information out there that I would recommend folks actually go and view out there. In any event, let's take a look and see what Galt is doing here. Galactin Therapeutics. It's gapping down, and it's trading right into an area where it had a nice sign of strength out here. Now, volume to the downside, 2.3 million shares. To the upside here, maybe this is a consolidation. We'll see. This is on January 9th at 7 million shares to the upside out here. So a little bit of a wacko-ish type of equity. If it breaks through the level of November 19, 2013, which is $5.36, and I'll say these guys out here that were buying, they've been distributing stock and just decided to get the heck out of Dodge out there. But that's on Galt, Galactin Therapeutics out here. Let's go back. Let's take a look at the currency pairs. We looked at the Great British Pound earlier in the first hour. We took a look at the Euro-Japanese yen. But speaking of yen, let's go take a look at the U.S. dollar-Japanese yen. Now, if you're watching this on Tiger TV, let me explain to you a couple different patterns that I am looking at out here. I was looking to, what I wanted to see was the U.S. dollar Japanese yen pull down to $99 and a little bit of change. So right around the $100 mark. The reason is because it has a nice longer-term Gartley buy pattern. So I've had this pattern here drawn in for a long, long time out there. What I also recognize is that the U.S. dollar Japanese yen had formed a smaller Gartley buy pattern, a 0.786 Gartley buy pattern that has held. Now, that's a couple of different buy patterns out here. I'm also willing to take a look at buying a breakout, a change in trend, and then buying the first pullback inside the U.S. dollar Japanese yen if it can break through the top of this trend line. Now, I'm just drawing the trend line out here versus, channel line is what I should say, just the top of the channel line versus the entire box out here. If you take a look at the pattern that existed last time around inside the U.S. dollar Japanese yen, if you go back to the trading sessions in May of 2013 and you use the use the close of May 23rd, the open of May 24th, doesn't matter, and you can hitch those up against the close of September 10th, 2013, or the open of September 12th. 11th, 2013. Once the U.S. dollar Japanese yen broke that trend, take a look at that nice move that it had out here. And now we've got a similar type of a channel line that in essence has been drawn in. So right now, the U.S. dollar Japanese yen, and there's always 5 outcomes of any type of Gartley buy or sell pattern. But there's also, if this is a breakout, here's what I want to show you. The breakout is, and this is where you start getting into some pretty decent reward to risk. See, this still has the ultimate of any Gartley buy or sell pattern, in essence, is that it completes the C point of an A to B equals CD to the upside. But there's a larger A to B equals CD inside of the, there's several of them, but inside the U.S. dollar Japanese yen, if it does break that level, it actually brings into play the 112 area. You're at 102. That's a heck of a price move out there. And that's just taking a look at the daily time frame for the U.S. dollar Japanese yen. So we'll pay attention to that red diagonal line, that little channel line, because if that area gets broken through, you'd like to buy some type of maybe A to B equals CD down pattern on a shorter term time frame. Right now we got the Dow is up 67, S&P's up 5. This is Steve Rhodes. This is TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 62, S&P's up about 5 right now. Russell 2000 up 7. Let's check in on some of the sectors here inside of the S&P 500. So the financial sector, the XLF, is pretty much unchanged. Up 4 pennies right now. It's trading out at 22.94. XLK up about 0.5%, up 18 cents right now. The energy sector, the XLE, up 1/4. It's trading out at 99.95. So the only real sectors here to the downside, you got the utilities off about 0.5%, down 22 cents. The industrial sector off about 6 pennies out here. The material sector basically unchanged as we speak. So that's what's going on there. Let me take a look here at. Let me do this. Let's go take a look at the XLE and the XLK. Let's go see what they're doing on their daily charts out here. So we take a look at the XLK. Give me a moment here to switch over, which is the number one weighting inside of the S&P 500. So if we take a look at it, it's trading up above all of its swing points out here. So this is the technology sector. Its most recent swing point was back here on July 24th. 11.6 million shares out there. So far today, 1.2 million shares. So volume a little bit on the lightest side for a Tuesday out here, but nonetheless, it's above those highs. Where can this really head to? If we take a look at the technology sector, well, first it can head to anywhere that it wants. But let's just take a look at the most recent A to B equals CD. Let's take a look at a couple different tools. So the A pattern, the A point is going to be the February 5th low out here. The B point is going to be your high. Looks like right around the trading session of April 3rd, and then a retracement into April 15th. It's already trading at the 1 to 1.618 area, often a dangerous spot. That's at $40. You're trading at $39.97 with no reversal here in place as we speak at 10:36 on terrific Tuesday. It says it can go ahead and make the next level. Next level is a 2 to 1, a 1 to 2, A to B equals CD. That would say price could move up to the 41.15 level. That's the daily chart for the technology sector. The energy sector, I mentioned that was also trading a little bit higher here this morning. Let's go take a look at the energy sector. The energy sector is traded out at 99.87 as we speak for the moment here. Let's go see what it is doing. Not as strong as the technology sector, meaning it's not above its swing points. Inside the energy sector, very bearish pattern out here, and that is on the trading session here of June 24th. Little doji candle on June 23rd, moves down with some volume, 17 million shares. If we see the energy sector get above that, that is really resistance. Of course, you've got its market profile resistance, and that's at the 100.02 level. Breaking above that says, hey, starting to get bullish. I say it really needs to break above the June 23rd level. That price point is 101.52. We'll move above that, and it would be in pretty decent shape out there. Let's go to Ben in San Jose, California. Ben, thanks for calling. Thanks for holding. How are you doing today?
Steve, doing great, man. How are you doing?
Excellent. Thanks so much for asking. You wanted to take
what's with the trophy? What's that trophy in the background?
That is it's one of many golf trophies that I have been able to acquire over my golfing career out there. So that's just one of them that's out there.
Very nice.
Yeah, thank you. Now that doesn't mean that I'm a great golfer. It just means that I've got a strong mind, and I'm able to. The cool thing about golf. Do you play golf by any chance?
Steve, actually, I windsurf, I kite surf. I do mainly water sports.
Okay. Wait, water sports are good. I picked up the game of golf kind of by accident. I had a neighbor that I didn't pick up the game of golf till I was in my 20s, and neighbor needed one of the guys that played in their foursome had bowed out, and so I got a call, and he said, "Now remember, it was like a Saturday evening." And he said, "Hey, would you fill in?" I said, "I'd love to, but I don't play the game. I don't even have any clubs. I don't even have any shoes." He said, "That's no problem. You'll be my partner." And he was a scratch golfer out there, and it was during football season. So I went out. I remember going to a Sports Authority. I didn't know anything about golf, right? Buying a pair of shoes, the ugliest shoes. I should have kept those things. What did I know? And so I buy a pair of shoes. He's got an extra set of clubs. Go out to the club. I'm on his team. I walk away with more money in my pocket than what I came with. I'm like, and we go in there. We watch football after the game of golf. I'm like, this is not too shabby. I think I can get. I think I can get into this game. And so from there, he actually taught me quite a bit about golf out there. So in any event, that's my golf story. You called this spot to speak about corn. Is that it?
Yeah, I was interested to see it on your momentum indicator, the December corn futures.
Yeah. What I need. Let me see here. Anything is possible. I need to see here if I've got the ticker symbol up here. But if I don't, what I'll do here as I juggle things is we'll take a look at it first with the TAS signal box profile. So I don't have it up. So I've got something else I'm going to do. I'm going to see if I can juggle around here. But are you looking to get into a long position? Tell me what it is that you're doing out here. And what it is that you're looking for.
Yeah, I've just been following it. I haven't actually been trading the futures in corn, but just been following the charts. And it just seems, from my technical analysis, it's starting to form somewhat of a cup bottom.
Okay. And you're specifically looking at December, not the September contract?
Yeah, I'm looking specifically at December.
So December 2014. Okay, let me get that.
Yeah.
Let me see if I can move that over here. Okay, so go ahead. I didn't mean to interrupt. I want to make sure I had the right contract for you. Okay.
No, I was just curious. I always see your momentum indicator. I'm curious what that would look like on a monthly chart or a weekly chart on your indicator.
Okay, so let's go ahead. We'll put up
just out of curiosity.
Yeah, let's go ahead. We'll put up the, I'll try to put that up out here for you. Okay, so I've got the December contract. Now, I've got the daily chart up on my screen out here. So, the data here is going to be relatively limited versus looking at the continuous contract. So I don't know that on the weekly basis I'm going to be able to give you enough information. However, what I can tell you on the daily basis, what is interesting about what you're looking at, it made a price relative strength divergent pattern back here on July 24th out here when it formed a little doji candle. And the very next trading session was a bullish reversal, was a hammer candle, and you like to see that. And what this did, Ben, on the very next session, you had some additional movement to the upside out here. So what it's trying to do, it's attempting to change its trend out here. So if you were going to trade it, because of the hammer candle, because of that reversal signal, it's probably a relatively low-risk trade, but your close would need to be a close below that July 24th low, which is at 356.50 out there. I'm just testing it out today with just one lot, okay.
pretty small stop, and just kind of a low risk trade.
It is a low-risk trade, and I like when price moves lower without strength, especially, when you're taking a look at the December corn out here, it's moved down with a vengeance. So, you like to be able to see some type of signals that it's losing its strength out there. And I think that pattern combined with the hammer candle and then yesterday's move, would make sense. Now, if I take a look at, in essence, the continuous contract out here, and we take a look at some market profiles, so I can give you some other areas or targets for you to look at. The nice thing about the daily contract here for the market profile, it too, as it was forming that hammer candle, it had formed a new signal box out here. So it had formed a new market profile. And that, too, is combined with what we just looked at on the Rhodes Momentum Indicator. It, too, is suggesting you have a buyable bottom. Now, what you need to see it get above is the 384.50 level out here, or that might be your target, on a trade if you're not seeing some kind of wide-ranging bars or accelerated volume coming into it. So, the continuous contract shows that same price relative strength divergent pattern out here. The last time we saw that, just as an idea, as an example, last time that was making lower lows with less relative strength was back here in June 2014, June 27. And the reason that I bring that up for you, Ben, is that when price had moved there, and it formed a little bullish engulfing candle, not a hammer, but still the reversal signal on June 18th, and then it had follow through on the next session, where it ran into resistance was the top of its signal box out there, its market profile. So watch that level in the 384-ish range as you want to see something accelerate through that level out there. And that would be my take on how I would take a look at trading it on a daily basis. You close above that, and then what you've got is now you have a confirmed change in trend out there. And then I would just say just use something simple like a trend line for your next target area. And in that case here, what I'm taking is the actual high from the May 9th level. Then I'm kind of using the June 23rd high, 2014. And then I would say that would probably be your next level out there as to a potential level of resistance. Then you get above that, and then you're in one heck of a good trade having bought the bottom.
Absolutely. Yeah, I actually have a target today of about between 381 385. Technically, okay. I see it kind of hitting that today, but I have to let it play out, see what happens.
Absolutely, yeah. I like the trade. I like the trade, and just use proper money management. Have your stop in place, and you'll be in good shape. So let's talk about windsurfing now. So what's the windsurfing weather like these days out in San Jose?
It's great. I actually go out. Well, I'm overrun most of the time by kite surfers because that's the more popular sport now.
Yeah.
But I usually go out in the Bay Area, and it's near a place called Foster City, which is south of the airport.
Okay.
And I got to tell you, Steve, during the summer, most people don't know it, but the water is like almost 80 degrees.
Really?
It's like bath water
in that area.
Yeah, it's pretty amazing. And on the low tide days, you could actually be out in the middle of the bay, and you'll hit a sandbar, and you'll actually be standing in the middle of the bay only with 2 feet of water.
Oh no! Now
it's really crazy.
Do you ever wear one of those GoPro helmet cams or anything?
No, I'm not into that.
No? Oh, okay.
Well, we used to, about 10 years ago, we used to duct tape, like these bulky video cameras to the mast of our sails. But, yeah, there's a lot of people out there with those GoPro units.
Now, duct tape. You just said something that needs to be in everybody's arsenal. Which is duct tape. Now, living here on the East Coast, where we are prone to hurricanes, you have to have duct tape. It's like, you ever see that movie, My Big Fat Greek Wedding? I think that was the name of it.
Yes.
Where the guy uses Windex to fix everything. They ought to be a movie where you're using duct tape to fix everything as well out there.
Oh, trust me, it's come in handy a few times.
Yeah, absolutely. Well, thanks for sharing with us. Got a lot of folks in the den here. They talking about San Francisco Bay Area. Just simply the best. Are you a native of that area, or did you move out there?
No, I'm a native from here. It's getting a little overcrowded. Well, over the last 20 years, it's getting way overcrowded here.
Yeah.
Maybe I'll come down and live near you guys.
Well, I tell you what, it's crowded here. I guess it's all a matter of perspective. We don't have the traffic that you guys have. We talk about as traffic problems. I say, head out to cities like L.A., San Francisco, and then you'll really understand what traffic is like.
Oh, it's become just like that.
Yeah, absolutely. Hey, Ben, good luck on the trade, and thanks so much for calling.
Hey, thanks, Steve. Appreciate your insight.
You bet. Have a great day. That was Ben in San Jose, California, and that was taking a look at December corn out there. Let's take a look here at, let's see, what else we want to take a look at here before. Well, we've got a minute here before we go into the break. Let's Ben had talked about the Rhodes Momentum indicator tools. We looked at the December contract out there. Great tool for being able to help you identify level, and it works on all time frames. That's the beauty of it. So he was able to pick up on a nice reversal pattern out here. But let's take a look at, and I don't remember which sector it is. Let me try the XLV. It wasn't the XLV, XLK. I seem to recall seeing a reversal candle inside of one of the sectors inside of the S&P 500. Well, there's only so many of them. I'll do it while we're in this break. I thought that there was a hammer candle that I also saw there, so I wanted to take a look at that. Much like the hammer candle that has shown up here in the SOX index, and that's important because the SOX index here, in essence, had broken down. And yesterday gave us a little bit of a reversal signal with that hammer candle. A little bit of follow-through here to the upside today, but just a little bit of follow-through. 877-927-6648. Hope you're having a terrific Tuesday. I know I am. The Dow is up 62. S&P is up 5 points. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades remains open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 44 right now. S&P's up 3. NASDAQ Composite up 19. I wasn't able to go hammer hunting during that last segment. Ran into something else that needed to be tended to. In any event here, let's kind of summarize where we're at during the trading session here as we speak right now. Let's come back over. Let's see what we've got going on in the futures market. So let's do that. And then we'll go take a look at the IWM. If we take a look at the first, I'm coming back and take a look at the futures here. So we'll look at the Dow futures. So the Dow futures here, because I'm kind of using that right now as a little bit of an indication as to what the market may want to do. Just simply, we've got that 3 drive to a top pattern out there. That is bearish. You can see here the Dow is sold off just a bit. Still trading right at the 0.618 retracement level. This candle formation doesn't complete until the 12 noon time frame. So you're going to have to stay tuned with our man Basil Chapman to get a feel as to what the Dow is doing. No reversal here as of yet, just a little bit of a sell-off, but nothing that looks to be too substantial. Let me see what else I've got in just this little set of tools out here. Let's go look at the IWM. Let's look at the IWM. Let's come over here. Let's take a look at market profiles on it as well. Where is the IWM? There we go. So you have the IWM trading up 86 cents right now. Still in a potential bearish type of mode out here. What I mean by that is it does have a to B equals CD pattern to the downside that is still in place. It's got an A to B equals CD pattern to the upside as well. That makes trading the IWM just a bit tricky out here. Now, the B point of the A to B equals CD to the downside is your trading set from July 10th. 50 million shares. As price crossed through that, it was with 62 million shares. So there's your kind of confirmed A to B equals CD to the downside. It's gotten a little bit more complex than that because the bulls came out in full fashion on July 18th. 46 million shares off of that low. Right now, here's what we know about the IWM. The market profile, the TAS market profile out here, support level, the unfair low, 113.48. You're trading above it. You're trading at 113.89. If you were to see the IWM close above the resistance level, the unfair high, the 115.61, then you start taking a look at a change in trend that may be underway inside of the Russell 2000. Then that could possibly set up, believe it or not, an A to B equals CD to the upside. And here's what that pattern looks like. You'd take the hammer candle from the May 15th level. You'd take that high that came in here on July 1st. That was the consolidation high that rejected the highs out here. And your C point would be the July 17th level. And that would give you an A to B equals CD to the upside of 125.73. That is not confirmed. That is for sure. And that would not be confirmed until it would break out above the consolidation high, the B point of July 1st out there. That doesn't come into fruition. That doesn't come into being until you see, I'd have to say, until you see a close above that unfair high level. Really, ideally, you'd see it close above the C point of the A to B equals CD down, which is the July 14th area, and that's at 116.46. So that's what's going on inside of the IWM. If we go check in on the Qs here real quickly, the Qs up 22 cents are traded at 96.99. The Qs are trading into the swing point high, which was from July 24th. That had 24 million shares. We've been trading for just over an hour and a half about right now. 7 million shares going into 24 million shares. Volume is not too bad for a Tuesday in the summertime. But, folks, stay tuned. And what you can do is you can go surfing with our man Basil Chapman. And if you're in California, you can go surfing out with our man in the Bay. And we'll get you all hooked up out there with Ben from San Jose. Folks, thanks so much for calling. Have yourself a great Tuesday. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.